I think we are live. What's going on, TEI family? This is the Everyday Investor. We have a special one for you all today. And this is a special stream for a number of reasons. But I think, as you know, people talk about the pending recession and pending recession that may be coming, maybe not coming. I'm not sure. I go back to a time, 10 years ago now, 2023. So, yeah, back in 2013 when I first got off into real estate. And first bought my few investment properties. I remember the big purchase in particular. It was a $100,000 duplex in Lansing, Michigan. I was finishing undergrad on my way to go to law school at Michigan State. So I'm working at DTE Energy as an engineering intern or engineering co-op, and just working crazy amount of hours trying to save up to try to buy my first property. I remember seeing this duplex that I really liked and going to try to get a loan for it. And I took my offer letter from DTE for the co-op, which pretty much said he's going to be working from this date to this date. So it wasn't like an indefinite thing. It was like, hey, no, this is a definite time period that he's going to be working here for. And I still got the loan. I got the loan to uh, get the duplex. And I thought after getting the loan and really like closing on a property, I'm like, what the heck just happened? It was a surreal moment for me, and I'm like, I'm not sure how they gave me this loan. When I told them that I'm only working for like 4 months here, and I guess fast forward a couple years later, I figured out that I was able to use a part of the income from the property uh, for my income, which really helped the numbers out. And again, that's just something that I found out later as I continue to buy property, sell property, things like that. Uh, but with all that being said, I think it's good when you get a chance to kind of when you're informed from the beginning. When you go into something, whether it's real estate or whether it's being a doctor, being an attorney, whatever the case may be, and you are informed. I think that gives you a lot more confidence. It allows you to move more comfortable, and that was something for me. I mean, I my information came from YouTube and came from just reading books, but I didn't really get a chance to talk to a lot of people who were loaning out the money, who were selling a property, who own property. I didn't get a chance to talk to a whole lot of people uh, in that regard. So for me, even though I jumped into the real estate game 10 years ago, I wasn't maybe as informed as I could have been. And I think again, this stream is good because we're talking with the experts now. This gentleman that we're going to bring on here in a second that I'm gonna bring up, and he's going to talk to us about real estate and some terms and how can just the average person, the everyday person, get into it. Man, he's an expert. He's a bona fide expert in this game, so that people who are watching this live, they don't have to start down this path like I did, just jumping into it without kind of really knowing what to expect, and just kind of fumbling around or landing in the right place. But they can go into it with confidence because they're getting information, valuable information, relevant information from bona fide experts. So with all that being said, I'm going to bring up Mr. Willie McGuire. How's it going, Willie?
I'm good, buddy. How you doing today?
I'm doing pretty good, and I appreciate you for uh, agreeing to kind of come on and talk to the audience here a little bit today about real estate. Again, as I said before, again, you're a bona fide expert, currently
I
serving as the
appreciate that. Like I said, I do what I do, man. I'm here to help people, man. That's what I'm here for.
Right. No, and that's big because a lot of times, people is for me personally, I know sometimes, without having information or having resources that you can kind of turn to or get information from before you do it, it can kind of like stifle you or like not give you all the confidence that you need to jump into something. But hopefully some information that you're going to share today is going to be very helpful for the person who's just trying to figure out, man, I want to get into the real estate game, but I'm not sure how do I get into it, whether it's from home ownership or trying to buy an investment property, whatever the case may be. And I think some of the things that you're going to share with us today is going to be extremely valuable to help that person take that next step or take that leap into the real estate journey. So can you talk a little bit about kind of your current position and what you currently do on a day in and day out? I know we were talking a little bit before.
So right now I'm the divisional president with Diamond Residential Mortgage out of Chicago, but I'm here in Michigan. I oversee Michigan, Ohio, Indiana, Illinois as a region.
Okay.
And I'm still involved in the day-to-day operations. I'm still out here working with real estate agents, working with buyers that are buying homes, working with sellers who are selling homes.
Yep.
I'm working with investors who are buying and selling and flipping as well. I'm dealing with builders and contractors on building new homes. I'm dealing with commercial side as well in getting people into commercial buildings and in building businesses as well that they're looking to acquire and whatnot. So
Okay.
we encompass a lot of different things
Wow.
in my day to day. But like I said, I'm still involved day to day with, getting people in the homes,
Oh,
whether they're buying a $60,000 fixer upper or they're buying a $8 million home. I'm treating them and I'm dealing with them one on one. And that goes from 8 a.m. until midnight,
wow.
24 hours a day, 7 days a week. If my phone is ringing and I'm answering it, we talking business, you
Gotcha.
know. And a lot of people they shut it down at 5 or 6 o'clock.
No.
I learned something a long time ago from one of my mentors
Oh,
in this industry. The phone rings, you're answering.
right.
The phone rings and your customer's calling. Don't send them the voicemail. Pick up that phone and talk to them. Give them the advice they need so they don't got to call back tomorrow. So you can focus on that next call. And help that next customer as well.
No, and that makes 100%, but 100% sense. But it's interesting because you would think that a lot of people don't have that same mindset. It seems like 5 o'clock, 4 o'clock, they shut it down. And man, I've even kind of ran into situations, whether it was with real estate or something else, where it's like, hey, I'm out of the office. Call me tomorrow or call me on. I mean,
Yeah,
even if it's on the weekend, because a lot of times I'm doing things on the weekend and trying to get things done, and they're like, hey, call me on Monday or call the office on Monday, and it's like, man, how bad does this person really want it?
yeah,
If they're,
very true.
kind of going about it that way. So I guess with all that being said, so you're not, I know you said some of the things that areas that you work with, or the people who you work with, you also work with like homeowners as well as maybe investors.
Of course,
Is that
yeah.
accurate?
That's my main function is to deal with residential lending.
Okay.
Everything else is a subsequent additional program that we offer out there, but we deal with home buyers.
Okay.
Like I said, that's 90% of my business is coming from home buyers or move up buyers or sellers that are looking to buy or sell a home.
So
It's tough right now with the economic climate that's going on with
yep,
rates and whatnot. Everyone's
yep,
getting discouraged and
for sure.
whatnot. There's a lot of debates going on out there. When are rates going to come down?
Yep.
When is the best time to buy? And these are things that I'm answering every day, but I don't have the crystal ball. I'll
Yeah.
be honest. If
Yeah.
I did, I'd probably be an investor and not really be involved in lending the money, but
Right.
I'd be playing the numbers and I'd be playing the hedging the money to make these decisions because I would know it. But the reality is that no one knows really when rates are going to come back down. They're going
Right.
to come down slowly. I know that because the industry can't afford for them to come crashing down.
Right, right.
Okay.
No, and I guess before getting off into, I guess, the interest rates, because I do want to talk about that. I
Okay.
first want to go just to kind of at a very simple term,
Yeah.
or just kind of giving some simple definitions here. What is the difference between residential real estate and commercial real estate? Because I know you said you do a lot on more so on the residential side, and then the commercial is like a subset.
Yep.
If somebody coming into your office and how you're explaining, hey, what's the difference between residential real estate and then commercial real estate?
Well, anything over 4 units
Okay.
by Fannie Mae definition is going to be commercial or extended multifamily.
Yep.
Okay. So that's something that's going to be a different type of home or, store frontage. That's going to be commercial. Uh,
Okay.
Again, we talked about briefly self-storage buildings. Those are going to be commercial.
Yeah.
Gas stations, that's commercial. Hotels, we do those as well. Those are commercial. Like I said, office buildings, office complexes, shopping centers, commercial. Residential, again, is going to be anything 1 to 4 family.
Okay. Okay. No, that's good. That's good information. So somebody coming into your office and saying, "Hey, I want to purchase a house," or I'm looking to purchase a house and I'm trying to get lending for it. I guess
Mhm.
what steps do you typically take them through in terms of, or are they coming in and saying, "Hey, I want a single family," or "Hey, I want a 2 to 4 units," and you're just kind of writing a loan, or are you asking follow-up questions to try to kind of figure out what's the best, I guess, property that they need to be looking
Yeah,
at based
I
on their
got you.
goals?
Yep. So what I do is an interview process, and I basically go down, income, assets, credit, and I go through just the normal stuff. What are your expectations? If they're being unrealistic or they
Yep.
have unrealistic expectations, we have to set the proper expectation for
Gotcha.
them so that we're all on the same page.
Gotcha.
What can my income support in making a purchase of a home? I have that conversation almost every single day because unfortunately a lot of people don't know. But if you look at what you're paying in rent,
Yep.
what your and what your income is coming in, your income with all your debts and bills and everything should not exceed 50% of your income. Okay, your taxable income. Okay, so if you're making 50,000 a year, okay, that means you got 25,000 disposable to buy a house with and pay all your other bills with. Everything else is secondary. So that's kind of where that's the maximum
Yep.
that we're looking for, because there's always things that are going to come up.
Yep.
Oh, I forgot about that bill, or I forgot about this bill. We're looking at the maximum amount we can utilize for qualifying someone on a loan. So again, we got to talk. We got to have that conversation. Okay, what's your income look like? How long you been on the job? Who do you bank with? How much you got in the bank? Realistically, how much are you looking to spend on a home, and can we afford that? Okay.
So when you say 25, so in that example that you're saying, okay, if someone makes 50, then we take half of that, and you say you can afford to pay $25,000 on a home. Is that the purchase price, or is that
No. So that's the
the mortgage
maximum
over the course of the year?
income allowed that we can use spread out over 12 months.
Okay. So in terms of like servicing a loan.
No. So example is you make 5,000 a month,
Yep.
2,500 a month is everything. All your bills have to be encapsulated inside of that $2,500.
Yep.
Okay, that's how we base it off of. Okay, and student loans. A lot of people think right now because they don't have a payment on their student loans that we as a lender don't calculate that in to their qualifying. Well,
Yeah.
Unfortunately, we do.
Yeah,
We
that'd be
have
silly
to.
not to.
Yeah. So even if I don't have a payment on it, I haven't made a payment in 3 years. Well, eventually you're gonna have to start making those payments. We have to factor that in.
Right.
Okay. So, and that's a big hit. A lot of people lose deals because they don't properly factor in student loans. They think because they have zero payment that doesn't count against them. When you got $50,000 in student loans, Fannie Mae and Freddie Mac will say, hey, we're going to hit you with 0.5% of that balance as a payment. Well, if you got $100,000 in student loans, which some people do, you're getting hit with a decent amount. I mean, that's a $500 or so payment on a monthly basis that you didn't factor in.
Right.
Into your qualification, and the lender has to do their job properly. Okay. And a lot of times, I'm not saying any names, but I've worked for a lot of companies and people just miss it, or people just don't think about it, or they'll think that the underwriter's not going to catch it. These underwriters catch everything.
Yeah, I would imagine.
And if they don't catch it, the investor, who is, Fannie, Freddie, Ginnie Mae, they're going to catch it. And then we got a problem,
So then again, we talked about interest rates earlier. Can you talk a little bit about that? I know kind of things are up at this point, but as far as how does interest rates affect how much real estate you can buy, or how big of a loan you can get?
It's affecting everyone right now.
Okay.
And the government's trying to do things to try to curb that. But the reality is, from 2022 in the first quarter 2022 till now, we've seen interest rates spike 3.5% to 4%. Okay, that means a person that was getting $100,000 loan at 3.5% or whatever, and now getting it at 7%, is paying about $300 more a month. Okay, and some people can't handle that. Now you talk about a $200,000 home or $300,000 home, and now you're talking about $600, $700, $800 more a month. That's tens of thousands of dollars a year, and it's making it's really curbing what people can afford, especially if you're first-time home buyer, especially if you're a one-income family, especially if you've got a lot of debt, student loans, things like that. It's affecting the affordability of buying a home. And right now, homes are going at a premium. I mean, like I said, right now, we listed a home with a good friend of mine and realtor. We listed it for $199 the other day. We got 20 offers the same day.
Really?
The very first day. It was the nicest house that came up in the community, and we listed it low. First day, first offer, without any other bids, we got 10,000 over asking.
Wow.
Now you got your first-time home buyer who doesn't have an extra 10 or 15,000 to throw at that house. They're just trying to get in on a basic bare bones program, maybe 3% down or whatnot. they can't compete against that next person.
Yep.
They can't compete against an investor. So what then? What is it for that person? And that's what we have right now is we have a bunch of first-time home buyers, a bunch of people who don't have a lot of money that want to get into home buying that can't. They're being disenfranchised from being able to buy homes right now.
So,
Okay.
So no, yeah, and I was going to say, so how, is it anything that those type people can do to put themselves in a better position to be able to buy home, as far as those first-time home buyers who are kind of,
Yes, yes, they can. They've got to be they got to be focused for one. They got to
okay,
work with a good lender who understands their plight as well. And that lender's got to put them with a good real estate agent that's going to work for them. Okay. And they can't fall in love with the first house they see that everyone else falls in love with that just came on Zillow 2 hours ago.
right?
Everyone wants that brand new fresh house with all the updates and everything else. Everyone wants that. So now you're competing against everyone. You've got to find that one-off scenario sometimes. You got to find that home and make it your own. Okay. And that's one thing we offer as well with regards to our renovation loans. We offer people that opportunity. Make this home your own. We got a 203K. We got a home style renovation. We got the Fannie Freddie products that are available. And we have other construction products that are available. And that may be the way that some of these consumers need to go. You know, a home that's not as nice. Maybe it's in the same community, but maybe it's 40, 50,000 less. Or maybe it's $30,000 less, but it needs $50,000 worth of work. That sale that you wanted, that you really liked, that sold for 200,000, you can get into that similar home. You're just going to have to go through a rehabilitation on that loan.
So I guess, and this is a good point to kind of try to mine through, because if we're saying, hey, this person maybe doesn't have the cash to be able to afford this put together home already, then I guess how do they go about buying a fixer upper at which they are spending 40, 50 grand on a rehab?
Again, they just have to get qualified for that loan with a qualified lender that does rehabilitation loans.
So would that be called like a construction loan, or?
It could be a construction loan. It could be a 203K loan.
Okay.
It could be a home style renovation loan. There are different types of loans that are available for that. Not every lender does the renovation loans though, because it's an intensive process that everyone has to go through. There's a lot of training on the lender side, and there's a process that you have to educate your consumers on as well. And not everyone's really cut out for it. Right. It's a lot more work. Sometimes the realtors don't want to deal with it as well. But once we get the loan closed, that's when this process starts for the lender. That's when all the back end work is happening. We're dealing with the contractors, which again, you got to get contractor bids. That's when, we're making sure that, things are getting done properly by the contractors. If there's structural repairs, we have a HUD representative in checking it out, making sure things are going as planned. And when there's not a process in place, when there's not a good flow, the HUD consultant will shut it down and say, hey, this isn't going as we expected. Yeah. So no one runs off with any money as well. So that's a great tool that FHA and HUD has available, and that Fannie uses as well with regards to renovation projects for consumers. So no one gets taken advantage of.
Got you. Okay. So then, and you're saying, is that part of the 203K loan, or is that, I guess,
that is part of a 203K loan? There's different types of 203K loans that are available.
Yep.
There's a standard loan, which doesn't really have any major structural changes to it. And then there's another loan as well. I can't think of the name right this very minute. But
so yeah. Then, and again, some of this stuff, just kind of being in the real estate game, I know already. But again, some other stuff I learned, so that's why I like to take notes and things like that. But I guess because from my understanding, you have like a VA loan, you have the conventional loan, you have a FHA loan. Mm-hmm. When you're rehabbing a property or buying a property to rehab, can you get a 203K loan with each of those, or is that like a separate thing altogether?
It's a type of loan through FHA for a first-time home buyer and someone that's buying it for their primary residency.
Gotcha.
Okay. If it's an investment property where you're trying to get a rehab loan for that, we have a fix and flip project or loan as well.
Okay.
That's for investors who are trying to turn and burn and put a property back on the market within 3 to 6 months.
Gotcha.
We're not delivering that loan to Fannie and Freddie. They don't accept that one.
Gotcha.
And then we have say you want to go into a conventional loan, that's a rehab loan. We have a conventional rehab loan as well. So you have multiple different rehab loans available to you. We just have to discuss those individually.
Got you. Got you. Got you.
Yeah.
Uh, okay. Okay. No, that's good. So then, as far as I guess we talked about the 203K. So then, as far as, can you kind of maybe break down, I guess, these particular three: conventional loan, a FHA loan, and a what was the other loan? Conventional, FHA, and then
Jumbo,
the VA. Because I actually, when
VA
I bought
jumbo.
my first duplex 10 years ago, I actually got an FHA loan, which helped me out because I only had to put down 3% at that
Yeah.
point, which kind of really
Yeah.
helped out.
Yeah. So again, conventional starts at 3% with this home ready home possible program. That's a great loan, and we'll talk more about that loan as well because there's some new changes coming down the road that's going to really direct more people to that project property or that type of loan. FHA 3.5% down. It's a government backed loan. We have MISHDA that's tied to that in the state of Michigan, which is our down payment assistance loan through the state as well. We're approved NISHDA, Linda, approved FHA, approved VA. VA is for our veterans so they can take advantage of 100% financing on their loans. Now, one thing I want to talk about with regards to VA, I'm a VA advocate. I do a lot of work with the VA for our veterans because they are not treated the right way at all. A lot of
Yeah.
real estate agents don't understand VA loans, and therefore they kind of look down to them. But our veterans have paid the ultimate sacrifice and
Absolutely.
should be treated as such. So when they come in with their VA offer, okay, they should be treated just like someone who's putting 20 or 30% down.
Absolutely.
But they're worried about repairs. The realtors are, or they're telling their consumers, be worried about the repairs, be worried that the appraisal's not going to come in on a VA. The appraisers are treating these all the same way. The appraisers don't appraise VA differently than they
Right.
do a conventional loan or an FHA loan. They treat it fairly. But there are
Absolutely.
certain things with regards to the condition of the home that on all government loans need to be met. Okay. So the VA actually tells you if there's a problem with the value, they will give you an opportunity to show cause why that value should be given. And they give you a timeline. Hey, Mr. Real Estate Agent, I'm only valuing your property at 389. You got it listed at 400. Tell me why I should be seeing it at 400. Tell
Right.
me why it should be. And if you can't give me a bona fide reason why, then I'm praising it at 389. But they give you an opportunity to voice your displeasure if the appraisal is not going to come in. No other loan gives you that opportunity. And our VA loans do give us that opportunity. We also offer a VA renovation loan. Okay, it's a great product, goes along with the FHA 203K and our homestyle renovation as well. But our veterans, our programs are very strong. Again, 0%, zero down, and again, a lot of the fees and costs associated with VA loans are waived by the lender as well, and we cover those expenses as well. So we try to minimize the cost on our veteran loans as well. And like I said, I've been a long-standing VA advocate, been trained by the Veterans Administration on how to properly educate our veterans on how to deliver those loans as well. And like I said, our veteran community rewards us with a lot of opportunities to service them.
So and I had a guest on recently, and she's a veteran. She was in the Navy. Brandon knows her, Tia Drain, and she bought two properties using the VA loan. And I didn't realize with the VA loan, from my understanding, correct me if I'm wrong, it's zero money down so you don't have to put any money down. Is that correct?
Correct. You don't have to put any money down, but you still have your closing costs and prepaids and things like that as well. But the great thing about VA loans, say because veterans get relocated fairly often as well, you can rent your property and they give you, as a lender, say you got to relocate to San Diego. You're living in Michigan now. We'll allow you to rent your property before you leave. We'll give you credit for that rental income to go buy another house right away. Not right away, like immediately. Like, I'm moving tomorrow. I'm renting my house. I got a lease agreement. We're giving you credit for that rental right now.
Because typically, how long does it take for you to be able to get that credit?
12 months until you file your tax returns. So there's a lot of loopholes. I don't like to put out there it's not really loopholes, but there's certain things in the loan process that, and I don't want to talk on this, David, because it comes up a lot on Instagram and these other things. People always trying to give insight on how to get over on the lending industry, how I bought 4 properties, blah, 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 doing this. And I'd be clowning on these guys. I'll be honest, because all you're trying to do is create mortgage fraud. You're
Right.
doing fraud. You got to stop that. If there's a right way and there's a wrong way to do things, do it the right way. Okay. And if you think you're gonna get something for free, you're not. But that at the end of the day, a good mortgage lender will educate you on how to go about getting a loan done, and they'll tell you if they can't. And if they say they can't do it, chances are you're probably in that gray area or breaking the law.
So,
And they're trying to.
I guess what's the situation you were talking about as far as somebody saying that they bought 4 properties using what now?
Well, like it's like saying on Instagram right now, I was commenting on somebody earlier. They told a person to go buy a fourplex, rent that rent out the 3 fourplexes, and in a year after you buying it, go buy another fourplex or go buy another property and use the income from that fourplex to qualify for the new one. The problem is most consumers don't claim the rental income properly or don't claim it at all.
Yep.
Okay.
Yes, sir.
2, they bought that property really in false pretense that they were going to utilize it as a primary residency.
Yep.
Okay. And many that take advantage of these down payment assistance programs and whatnot claim that they will live in the property for 5 years before making it a rental or before moving on or things like that. There's certain stipulations to a lot of these down payment assistance and first time home buyer programs that have that written in there. Now, whether you read it clearly and understand it clearly, that
Right.
that's the guide,
Yeah.
so be it. I've seen people buy homes, have no interest in ever living there day one, and they convert it to a rental. And it can cause a major problem for not only the lender, but for that consumer, because that is fraud. And a lot of times the lenders are the ones that they blame, but the consumer is culpable for that. So you gotta be forthright with your lender. You gotta be forthright with yourself and not try to, if you want to be an investor, be an investor,
Right.
but put some skin in the game.
Yeah.
You got to put that 25% down and invest yourself into that transaction if that's what you want to do. Now, again, it's okay to live and be a landlord and live in your fourplex and whatnot and buy other properties. Nothing wrong with that.
Right.
But this particular scenario was buy a fourplex, live in it a year, then go buy another property using the 5% down program and live in that for a year, and then flip that into a rental and then go and buy another property. And the key to all of that is you have to report the income and earnings. If you report 0, you're getting 0, and your leverage on a property you're not claiming income on, which in some cases is illegal as well.
I guess why wouldn't they report the income or claim the income on their taxes?
David, most consumers who they write off everything. They write off every dime so they don't have to pay taxes on it.
Man, that's a tough. I mean, I get trying to pay less taxes as possible, but in terms of like just writing off so that, and again, you're going to have depreciation and things like that, insurance stuff, maintenance that you can write off legitimately and take advantage of.
A lot of times people just need to get an accountant. They really need an accountant to educate them on the process of being an investor as well. You can ask Brandon. I refer Diana Smith, my accountant. I refer a lot of people to my accountant because they need to know how to do things the right way.
Right.
Okay. My son, shout out little Willie McGuire. He is going to be an accountant as well. He's in his 3rd year in accounting at Adrian College, currently at Price Waterhouse as an intern right now.
Nice.
Shout out to my little guy, but it is, it's a game that a lot of people play and they play it the wrong way. And if you just do it the right way, everyone's trying to get ahead.
Yeah, I understand that.
To win at the game of life. And the game of life, still, you got to play it the right way. You got to do things the right way.
So what's the importance from your perspective of, because I mean, I for the last, coming out of undergrad in college and you initially, when you do your taxes, you're kind of going with, you seeing, everybody does taxes these days. So everybody has a cousin or an aunt or an uncle, somebody does taxes that you can go to and pay the $100, a couple $100. You got a couple kids you can claim, and next thing you know, you're getting $6,000, $7,000, $8,000 back, and life is good for 2 or 3 months. But when you start, like when you have a business, you're trying to operate things professionally and the right way. Can you talk a little bit about the importance of like having an accountant, not even from like the person standpoint to avoid fraud or things like that? And you still have to be up on the accounting. It's not like
Yeah,
you could just turn a
exactly.
blind eye. But I would imagine that it helps you out as the lender when somebody is trying to come get a loan, and you're asking for different documentation, and they can produce that and feel
Yeah.
confident that it's done right because it's done by a CPA or an accountant, as opposed to uh, uh, Shaniqua, who she's been doing taxes for a couple
Well,
years.
listen, it comes down to this. Right now, everyone's trying to be an entrepreneur.
Yeah,
Everyone's trying to be a creator.
yeah, yeah, yeah,
And so what comes with that, they're getting paid under the table contracts, things like that. You still have to report some earnings in order to buy a home. You still have to report income in order to qualify for a home. Okay. And the reality is that you need a really good accountant. You don't want to be that statistic, that NFL player, that you don't want to be that superstar who didn't pay tax. Now IRS says you owe them $50 million.
yeah.
Okay, you don't want to be that person. Okay, none of us want to be that person. I've been through an audit myself. Hey, it ain't no fun.
Right.
Okay, but you got to report your earnings. Okay, it is imperative if you've got attorneys working for you, like yourself.
Yep.
If you've got, if you go to see a doctor, you're seeing a professional. Go see a tax professional
Yep.
as well. It
Yep.
doesn't have to be a CPA, but it needs someone it's got to be someone that's trained on how to handle business tax returns or self-employed income.
Okay.
First
No,
and
and
foremost.
that's good. And I would even take it a step further. Just because you're an accountant, I want somebody who specializes in real estate. If my big thing is
Yep.
real estate, I want to go to an accountant that specializes in real estate, as opposed to someone who maybe not as active or involved in the real estate industry. Just so I know that
Yeah.
from a tax benefit perspective, I'm getting everything that is due to me from a legitimate standpoint.
No doubt, no doubt, no doubt there. But let's talk on taxes real quick,
Okay.
because you brought up a great point. This is the best time of year for first-time home buyers, people who want to buy a home, get back into home buying, to take advantage of home ownership. Okay,
Okay.
you get a tax return, you get a little bit of money in your pocket. Don't go and blow your money on junk. Okay, don't go and get a new car. Don't, unless you need transportation to get to and from work. Don't go buy. Invest in your future.
Yeah.
Invest in yourself. A home ownership is the biggest tax write-off that most of us will have outside
sure.
of our children.
Yeah.
Okay.
Sure.
Take advantage of that money that you're getting back from Uncle Sam. These tax laws keep changing. Pretty soon, as you know, a lot of people are seeing dwindling tax refunds. Okay. The reality is that that's going to continue. Okay. We need to invest in our own home ownership. Okay. And so many of us don't have that ability to buy, but we really do if we just manage our finances
Yeah.
better.
Yeah.
I tell people, and people can reach out to me, I'll send you a budget sheet. It's generic form. Just put your debts and liabilities down, and you can figure out how much money you're wasting on a monthly basis.
Yeah.
I look at tax returns, I look at bank statements. You would believe the amount of waste we as Americans, we waste so much money eating out. We waste so much money on things that don't really have any value.
Right.
But when I say to someone, your house payment is going to be $1,250 a month, why is it going to be so high? You spent $1,250 last month just eating out and stuff.
Easy.
Grocery shopping, but yet you still went and ate out.
Right.
What's the point of buying groceries if you're going to eat out every day?
So then, and I know you had said that you recommend your accountant to different people who maybe are looking for somebody. Would you happen to have the same thing? Because obviously, the better your credit score is, the better interest rate you get, which means that over the course of the loan, you're paying less in interest, which could save you tens of thousands of dollars, or maybe hundreds of thousands of dollars, depending on the size of the property. I guess, what tips do you give to people, or do you refer them to someone as relates to getting their credit in the best shape as possible prior to trying to apply for a loan?
That's a great question, Dave. I appreciate it. What I try to do is evaluate it, give them tips on it up front. I'm not a credit repair specialist or anything like that.
Yep.
I'll be honest, I don't believe in a lot of those companies. Some of them are out there doing really.
Did we just lose them?
You there, Dave? Sorry about that.
Okay, yeah, we're here.
Yeah. So I believe in a lot of that. What I do I try to evaluate it. I tell them things that they need to work on. And we have tools in our office to help people through the credit bureaus as well. It doesn't cost them money to utilize some of the tools we have at our disposal. Okay. Every credit report I get, it tells me, hey, the consumer has the ability to improve their credit scores by 60, 80 points. It tells me right there on the credit report.
Really?
Yeah.
Does
I
it
mean,
tell you what that person needs to do to be able to get that increase?
it doesn't break it all down step by step,
Gotcha.
but it says they have the ability because it's an algorithm that's running.
Right,
Okay.
right.
And it's basically saying, you look at, first thing I do is look at high balance revolving credit cards. Okay. How many of them are maxed out? Right there is 10, 15 points. Paying stuff half down to 50% of the max. That's going to get you points right there. Sometimes it's just picking up the phone call and dialing DTE saying, hey, DTE, I'm trying to get a mortgage and I show a late back in 2021. Can you help me out with that? DTE will give you a one-time grace removal of
Really?
derogatory in your credit.
Okay.
So will some of your credit card companies. If Capital One is one that ain't giving you nothing, but some of these companies will work with you and say, you know what, we'll take care of that. Or
Right.
your credit unions or things like that. They'll sometimes work with you to help
Nice.
you out because they want to be able to extend credit to you in the future.
Right. No, that makes perfect sense.
But like I said, most lenders have tools in place. Now they can't give you say, if you do this, this will happen, because now they're working as they're claiming they're a specialist on that. But they can say, hey, listen, you can do a lot of this yourself. Okay. And that's one thing I want to talk about, because a lot of these debt consolidation, debt reconciliation companies, they take your payments and they settle your debt for less than the full amount.
Sure.
That's something you can do yourself.
Yep.
You got $1,000 debt. You want to pay them, say, hey, I'll give you 25 cents on a dollar if you remove this debt from me.
Yep.
And they'll say, okay. And then they'll remove it. And
that's
reviewing the Fair Credit Reporting Act, something I've specialized, kind of reviewed myself to help my own credit, because when I was young, coming out of college, I was reckless, man. I was at Macy's. I was at Hudson's back in the days. I'm buying clothes. I didn't have any sense of responsibility then.
Right. Yep.
When that bill came due, it was sitting on my table until I got around to opening it. And then it was late. It's just, we all made bad mistakes.
Yep.
Okay. And so you got to learn from those mistakes. And I credit my wife on getting me organized with regards to paying my bills on time as well, and putting money aside and having reserves and whatnot, because you never know. Lose your job tomorrow. Get injured. You get injured, tomorrow, and you can't work for 30, 60, 90 days. How's that mortgage going to get paid? How's your car payment going to get paid? You got to have some reserves. Yep. And people need to start with that right there. Save up 3 months reserves, have that in the bank, readily available. Don't spend it. And if something comes up, you got that rainy day fund to do whatever you need to do. You need to do a home improvement, because when you buy a house, everything's not going to be perfect.
Right.
You get a plumbing problem, you got to call a plumber. It's $1,200 to get a plumber in there to fix the problem. You got to have the money available. Yep. Plumber's not going to do it for free. So again, it's all about being fiscally responsible and responsible with what you own as well.
So I guess let me ask you this, because I think, and correct me if I'm wrong, we were talking like this was maybe a few weeks ago, maybe even a month or so ago now, and you were saying that your son, he was in the process of kind of buying maybe his first investment property. Was that accurate?
No, he's looking at buying his first house, man. He's looking at buying the house that he's going to live in for his final 2 years up at school. We actually looked at one yesterday.
Okay, so then I guess it's still a pretty good question. So what's the difference, or how do you determine or advise people as it relates to buying a house as opposed to buying an investment property? Because I guess I'm of the mindset personally that everybody, regardless of whether you have a house or not, should at least own an investment property. But I guess how do you
got to own your own home first.
Okay.
The lending guidelines state you got to, in order to buy an investment property, you first must own a home of your own. Okay. That's kind of a guideline for lending. Okay.
Hold on. I guess, how does that work? So you're saying that before I own a home, before I own an investment property, I have to own a home. Is that through like a FHA, or is that, or like any loan, or is that just like a particular type of loan?
Well, again, that's Fannie Mae's guidelines, verbatim. you cannot own an investment property if you don't own a primary home. If you want to live with mom and dad and buy an investment property and you're buying in cash, you can do whatever you want to do. Okay. But if you want to get a mortgage for it and you want to put 25% down, I'm sure there's a way that you can get around it. But there's no other way to go about doing so that I'm aware of.
And I mean, that's good information because I guess I've never I guess I never knew that. I was thinking if you were renting a place and you wanted to go purchase an investment property to start renting it out.
25% down, 25% down, you can make it happen.
Right. No. Okay. So you're saying in an event that you're trying to put less than 25% down.
Yeah. There's no other way. Yeah.
Okay. But you're saying you can rent somewhere, be renting a place somewhere. You want to go buy an investment property.
The guidelines are very strict with regards to that. I haven't ran into that problem recently. But in the past, I have ran into it. But say you own your home free and clear, and you want to go buy an investment property, you could do it, but you already own your own home. But it's really the risk grade because you're renting something, you're buying a property and investing in a property, and you don't own your own home already to fall back on. Okay. And I think that's the way it's really looked at. And I'll have to look up the guidelines on that again and check it out and make sure it hasn't changed at all. But that was the guideline in the past, that you had to own your own home. You can't go out and get an FHA loan for an investment property. That's
and that makes perfect sense. I guess you were thinking, I thought you were thinking in terms of loans across the board or investment properties bought across the board. But that makes sense if they don't want you to go
and buy. You're renting and you want to go buy a commercial investment property, and you got the funds to be able to do it, and you got the income. Yeah, you can do whatever you want on that side.
For sure.
But when it comes to residential, 4-family and below, the underwriting guidelines read that you need to own your own home.
No, that makes sense. That makes perfect sense. Yeah, that makes perfect sense. Huh. No, yeah. So that's good information. And then I guess, how can people get started? I know you were talking about hey, investing in or owning your own home, and how now that's a big part of I guess what you say compared to your kids what you're doing. I guess, how do you advise people, or kind of what do you recommend to people as far as, and how do we get started if somebody coming to you off the streets, or you're just bumped into somebody and they're like, hey man, I'm trying to buy a home, or I'm
just have a conversation. Get with a good lender. Get with a lender that knows. They're not telemarketers. No offense to those telemarketers that work for the big companies out there, but you're not talking to a telemarketer. You got a problem solver that can help you and evaluate your approval. That's the first step. Okay. And knowing that you don't waste that person's time if you're not really ready.
Right.
But because when I sit down with someone, I'm spending money to evaluate their approval. Right. It may cost me $30, $60, $80, $90, $100 to run their credit. And I'm doing background, I'm doing things. I'm pulling verification of employment. I'm putting my team to work immediately. Day one. And when I say my team, when I take an application, I send an email to my whole team like, all right, let's get on this right now. Boom, boom, boom. So when that loan is ready to go to underwriting, we got everything ready to go. Right. That way we can speed through the process of getting the loan from start to finish, 7, 10, 12 days. Boom. I got you in the house. When I make promises to people on dates, unless something comes up, we hitting them dates, and we hitting them early and on time. So
then, as far as so that's good in terms of, like, I know you talked about the lender and then the realtor, but I guess before they even come see you, what are some of the things that they can have in order with themselves before they come to see you, so that it's more of a
know their credit, know their debts and liabilities, know what and have an idea of what they want to buy and where they want to live at.
Gotcha.
Okay, a lot of times people call me and say, hey, I really don't know, what I'm looking for.
Right.
Well, you got to have an idea. Do you want a 3-bedroom house, 4-bedroom house?
Right.
Do you want to live in the suburbs? Do you want to live in the city? A lot of people say, I don't want a maintenance free. I want a condo. Well, understand that a condo is a lot more costlier than a single family home.
HOA fees.
Yes, them HOA fees will bust your head open.
Every time. Every time.
Gotta be on top of that.
Oh, that's good.
Condos are great things. They're great places. But again, do you want to live next to your neighbor? Yep. Do you want everybody hearing all your business? Yep. That may not work for everybody. Some people want to live in the suburbs. They want to live in a neighborhood and then they complain that their neighbors are right on top of them there.
Yep.
Okay, so maybe they want to live in the country a little bit, and they got to look at the commute and how far that is. One thing about country living is taxes are lower. Okay, you got a little bit of room space, but there's a lot more maintenance involved in that property.
Yeah.
Okay, these are all things that you need to be thinking about as well. We get a lot of requests for, I want a pole barn on my property. I want to be able to do other businesses on my property as well. I want to be able to, whatever it may be. I want to raise chickens, or I want to have cattle. You can have those things as well, but not in the city limits. You're not going to have
Yeah,
those,
no, you definitely not gonna have those in the city.
But like I said, a lot. I see a lot of interest in the multifamily space.
Yep.
And people need to look at the multifamily space and make sure that's really what they want to get involved with. Because being a landlord, as you know, and I know, it ain't no joke.
Yes, man, yeah.
And then, like I said, when you have things like rent moratoriums where the government says that people don't got to pay their rent, then you get one person that says, I ain't paying my rent because the government said I didn't have to. And you got everybody saying, I'm not paying my rent.
Yeah, and again, I hope that you come back on, because I know we are coming up on 50 minutes, and I know we talked a lot about the residential side of things. Now I always want to kind of keep that on a separate side, but I definitely agree with you in terms of, and there's a lot of the parts out on the commercial side or the multifamily side, as far as where you invest in, the type of property you invest in, whether it's a skyscraper or a garden style or whatever the case may be. So I know it's a lot of different things to get into. How do you underwrite that deal?
I got you. Well, I'll tell you one thing on the commercial space.
Yeah.
Like I said, I own 16-unit apartment complexes.
Nice.
32-unit buildings. And again, you can't just jump into that space any longer. You got to have some capital.
Yeah.
And you got to have reserves. So before you even consider that, make sure you got your money put up. Okay. And it can't be in the mattress. That money's got to be seasoned in the bank. Yep. Seasoning means your money's in the bank 60, 90, 120 days that I can verify that it's been there. That goes for commercial. It goes for residential housing. You cannot just all of a sudden come up with $20,000, $30,000, $40,000 without a red light going off saying, this ain't going to happen. Okay.
Right. No, yeah.
Be in the bank.
Yep. No, and I definitely agree with that. And just understand, because again, I came over when I started 10 years ago. I was on the residential side, and on the last 2 or 3 years, I've been on the commercial side. But residential investing is a completely different ball game from, like you said, you're on the 16 units, and that's a completely different calculus as far as like you said, reserves or property management. It's just it's night and day compared to investing on a residential side with the single families or the 2 to 4 units.
Yep, I got you. Gotcha.
So
David, we got to connect, man. Like I said, we got so many similarities. We got so many things going on. Like I said, I'm glad that my boy Brandon is kind of hooked us all up together.
Yeah, for sure.
Linked us together. Like I said, I love being able to help consumers to get into homes. I love being able to help people achieve that dream. And that's one thing. That's our motto, is that we make the dream of home ownership a reality. And I stand by that, man. I'm trying to make sure everybody has the ability to own a home. Because it's the greatest feeling ever when you open the door to your own space.
Yeah.
You walk in that door, you close that door. This is mine. I own this.
Yep.
Ain't nothing like it, man.
No, and I completely agree with that. I know, for me personally, the first time, duplex was my first property that I owned, that I stayed in one unit. It was kind of nerve wracking because I was like 23 years old, and I'm like, man, I just signed on a loan, but man, it worked out. It wasn't that big of a deal. You go about it responsibly, and things are going to work out, and you got that nice nest egg. I just refied that property a year ago. Like I said, I bought it for 100, it refied for 150,000. So
no doubt.
So was able to take out some equity in that property and get the PMI and all that stuff out the way, because you got the 20%. So so man, I definitely enjoyed this time, and we definitely have to do it again. Like you said, I definitely appreciate Brandon for connecting us. I guess one last thing before we leave or wrap up. How can people get in touch with you if they want to kind of follow you, if they want to reach out to you, social media platforms? Do you have a website? How can people get in touch with you?
All of the above.
Okay.
Again, they can reach me at 734-493-1711. I'm in Canton, Michigan. Again, willie.mcguire@drmconline.com is my email address. Everybody in the community, I've worked all over Detroit. I worked in Northland Mall. I used to be at Westland Mall. I've been at Fairlane Mall. I used to be in the shoe game for a long time as well. So they used to call me Westland Willie. I'll be running shoplifters down the, old football skills guy, Like I said, a little bit about me, though. Like I said, I've been in the industry 20 years.
Okay.
Okay. And
I was shorting you 5 years. I said 15. I said at least 15,
yeah,
but you
20,
say, hey,
20
them
years.
5 years, them big.
Yeah. No, I've been in there 20 years. Brandon came and worked for me when I was over at Gold Star Mortgage in Ann Arbor, and he came to work for me, and he was one of my assistants over there. But I've been in the game a minute now. I learned a lot. I always got people calling me because I didn't experience a lot in my time, and I've gone through a lot of tough deals and whatnot. And what we do is we problem solve, we make things happen. But like I said, I'll send you a link to my my personal website and whatnot. But again, they can look me up, Willie McGuire. I'm all over the mortgage lending space. You can always find me as well. And my phone number 734-493-1711. I'll take your call 24 hours a day.
Okay, no, that sounds like a plan. And I think one thing that you did leave out is just not just because you're in Michigan, you are able to lend in other states, a couple other states as well outside of Michigan, correct?
Yeah, Florida, Texas, Ohio. At one point, I was lending all over the nation. I've kind of streamlined that a little bit, back, and soon I'll be adding more states as well. I came over to Diamond Residential Mortgage in December as the divisional president, and I'm growing right now. I'm growing the company. I went a little smaller this time around, and nothing wrong with changing companies when the company fits your needs and whatnot. I've been to the giants, and I've been down smaller, and I'll tell you, I prefer to be a little bit smaller. I can get better attention right now. I'd rather be that. I'd rather be at that smaller, centralized company that you can go right to the head right away. That's how I started out in this game. I could go right down the hallway to the president of the company and talk to him in a heartbeat. I like that feeling, man.
I got you.
I can be more influential to my clients when I have that kind of control.
Absolutely.
So, like I said, David, it's been a pleasure, my friend.
For sure.
And like I said, anytime you need me, anytime you want me to come online, I'm there for you.
Okay, no, I appreciate that. And we definitely have to do it again because I definitely want to get off into that on the commercial side of things and kind of pick up there and hopefully just kind of, like you said, we was talking offline as far as just kind of give us the what the market looking like in terms of the interest rates and just kind of real estate market in general with, like you said, right now things are at a premium and what's that the forecast as far as things coming down and whatnot. I guess over time would like to kind of maybe stay up on that just to kind of help out and provide value to the audience, to the listeners, to be able to, as they're getting off into the game, they kind of know what to expect and know what's out there, what the market is doing.
Definitely, sir. Like I said, I definitely want to get on that. We can have a weekly call or whatever necessary, once a month call or whatever on that. But like I said, it is kind of a seller's market right now, but there is space for buyers to get in. Again, don't be hesitant. Give us a call and we can get you taken care of.
Okay. No, that sounds like a plan. And I think that's the best way to go out. So until next time, TEI family, we logging out.
Thank you, sir. Have a good one.
You too.